Module 1, Introduction to Insurance. What is insurance and why it is important? The basic principle of insurance is to provide protection to a person or an entity from any sort of financial loss caused due to events like fire, accident, hospitalization, earthquake, etc. Let us see with the help of an example. After a tiring week at work, Raj plans to enjoy the weekend at a beach. Just when he had parked his brand new car, a coconut fell on it, damaging its window pane. Oops, this would be a bit heavy on his pocket. But he need not worry as he has insurance and his insurance company would bear the expenses of damage. In these type of uncertain scenario, there is one common thing, and that is financial loss. Insurance compensates for these sort of financial losses. Let us see the next concept. Insurance contract. An insurance contract is a contract between the insured and the insurer. Who is an insurer and who is an insured? An insured or a policy holder is a person or an entity that buys an insurance policy and is covered against financial losses. An insurer or an insurance company is an entity which provides insurance and undertakes to compensate. Now, we need to know that how does a contract come into existence? The process of applying for insurance is called proposal. When one party proposes and another accepts the proposal, then it is a valid contract. So who do you think makes a proposal to whom? The insurance company to the buyer of policy or vice versa? Well, the answer to this is offer is made by the buyer of the policy. Surprised? Let us understand this with the help of an example. When applying for insurance, the first thing you do is get the proposal form of a particular insurance company. After filling in the requested details, you send the form to the company, sometimes with a premium check. This is your offer. If the insurance company accepts your offer and agrees to insure you, this is called as acceptance. In some cases, your insurer may agree to accept your offer after making some changes to your proposed terms. For example, charging you a double premium for your chain smoking habit. To summarize, after the insurance company agrees to take the risk, the contract is formed and the policy comes into force. In short, insurance is a transfer of risk by a person to an insurance company. What can be insured? What is that one thing that comes to your mind if you want the insurance company to cover for yourself? Be it anything like your shoes, eyes, tie, etc. Well, for me, I think my memory is the most precious thing to me. So I want the insurance company to cover my memory. So jokes apart, let us see in reality what all things the insurance companies cover. Insurance can be taken for both tangible and intangible assets. Tangible assets are those which can be touched, like human beings, vehicles, house, etc. Whereas intangible assets are those which cannot be touched. Nowadays, you see celebrities and businessmen taking insurance for their body parts. Yeah, sounds fascinating, isn't it? For example, Sania Mirza insured her hands. Lata Mangeshkar has insured her voice. So voice is something which cannot be touched, right? It is an intangible asset. How does insurance work? A large number of people exposed to a similar risk of loss are gathered. Each member pays a small contribution known as premium. A pool is created. This fund is then used to compensate the few members who will suffer the particular loss. I hope by now you have understood the concept of insurance. Let us take another example. Suppose there is a group of 100 people for a common purpose. Each member contributes 100 rupees every month for this purpose. Suppose Mr. A from this group falls ill someday, then the money is given to him from this fund. The fund that is accumulated is called as pool. The amount what each member gives in every month is called as contribution. So this is basically the concept of insurance. Let us see our next concept. Risk, peril, hazard. The words risk, peril and hazard, all of them means the possibility of loss, but they can be used interchangeably. However, in insurance, these words have distinct meanings. So let us see with the help of an example. Raj is driving a car. There is a risk of the car meeting an accident and therefore getting damaged. So, risk means the uncertain possibility of loss. Loss की संभावना. Suddenly it meets with an accident. Now this is the cause of loss. Loss का कारण. If Raj broke the signal and then met with an accident, it would increase the possibility of loss, which is called a hazard. परिस्थिति जो loss की संभावना बढ़ा दे. I hope you are very clear with the introduction to insurance now. So let's test your knowledge. Question 1. Due to excessive smoking, Mr. X suffered from cancer and eventually he died. Can you tell me what is excessive smoking from the below mentioned options? Option A, peril. Option B, hazard. Option C, risk. Option D, none of the above. Well, the correct answer is option B, hazard. As you learned that hazard means it would increase the possibility of loss. So due to excessive smoking, Mr. X's chances of suffering from cancer increased and it increased his possibility of death. So let's move on to our next question. Who makes an offer in insurance? Option A, policyholder. Option B, insurance company. Option C, both of the above. Option D, none of the above. I'm sure you must have got this answer absolutely correct. The answer to this is option A, policyholder. As we saw, the offer is made by the buyer of the insurance policy. The buyer is the policyholder. Therefore, policyholder is the correct answer.